Hey everyone, it's Nick and Ron with another edition of Ask Ron. How you doing this week, Ron?
And I'm good. We just got through taping a brand new Structuring Your Empire course. So we're going to get these questions answered here before I leave here today. And the weather, I wish you snowbirds could be down here right now. I couldn't go anywhere in the country and ask for prettier weather than we got out there today. Sorry, but in case you didn't know it, you can move if you want to. That is, if there's any houses left in Florida. I doubt there are.
We're not full yet, right?
Yeah.
All right. First question is from Aaron, right here in Florida.
Okay, Aaron.
Is there any reason why I can't make my keeper entity a C Corp?
You should have. And really, the only danger of having a C Corp is that it's going to be harder for you to take money out of it because you can't take it out as a draw or a distribution. If they call it a dividend, the corporation cannot deduct it as an expense, and yet you get to pay taxes on it, thus the term double taxation. So if you're C Corp, however, in fact, my operating entity B is a C Corp, but it doesn't make any money because I make sure it all gets spent out on expenses before the end of its corporate year. And so I don't have to take any personal draws out of my C Corp, but it pays a lot of the expenses that one might be paying out of their pocket if they didn't pay it out of the entity and charge it off to a business. One good thing about a C Corp now, it's taxed right now at a 21% federal tax rate, which is probably way lower than your personal income tax bracket. But be careful, if you live in Florida, you got another 5.5% state tax. So in fact, 26.5% is still cheaper for me than the 37% I'm taxed on as an individual. And that just took place 1st of 2018. So, we got to adapt with the time. So I can make a case that some of your income might want to be taken out of some of your income might want to stay in your C Corp because it is taxed at a lower rate than you are. But again, be careful taking money out of your C Corp.
All right. Speaking of taxes, Michelle from Arizona says, how are the non-refundable deposits taxed?
As raw, plain old short-term income.
All right, how about when? When are they taxed?
They're probably going to be taxed the year you receive them because of the words non-refundable. This is a discussion you should have with your CPA, but don't be shocked if he tells you got to pay short-term capital gains on it because you don't have to give the money back, whether they buy or whether they don't buy it.
All right. Next question is from Howard in Kentucky. Mm-hmm. I have a mortgage on a rental property that prohibits me from selling an option. Is this common? Could the lender call the loan due if I did?
I don't know what you mean by it prohibits you from selling an option, what that has to do with your loan at all. It doesn't make any sense to me. Somebody gives you a loan. How does that even affect you selling an option? It doesn't make any sense. So there's more to this story than you're telling me, and that would require an investigation for me to be able to answer that phone. The lender can't tell me how to run my business. So those two don't go together. Selling an option has nothing to do with the loan that I got from the lender. It don't make any sense.
Brian from Louisiana says, if I make my best friend trustee to all of my land trust and he and his wife, who is an attorney, divorce, can his divorce affect his position as my trustee?
No.
Or endanger my trust in any way?
No, because the trustee doesn't owe anything and they don't have any liability. So I'd say the answer is no.
All right. Perzina from Georgia.
By the way, you can fire that trustee anytime you want. So quit worrying about that. If he gets ornery on you, just fire him. All that is an appointment of successor trustee document that you fill out and send to him and replace it with another trustee. And I assume Louisiana is one of those states where an individual has to be the trustee, because if not, your LLC can be the trustee.
Seems like a lot of these questions were built for this course that we just recorded.
Yeah, it seems like it.
Perzina from Georgia has a few questions here. Hi, Ron. When will you have another free seller financing virtual workshop?
Don't have one scheduled. I got one you can get. I don't have one scheduled.
Should a married couple continue to do joint income tax?
Man, don't ask me. That's a question for your CPA, but almost certainly the answer is going to be yes, because you save money filing jointly instead of filing individually.
Now that banks have decided they'll become landlords and buying up tens of thousands of foreclosed rental properties, what effect will this have on small real estate investors?
What makes you think banks are buying up rental properties? I think you're probably misinformed there. The last thing a bank wants is a property. Now, there are hedge funds buying up rental properties, and a lot of them are reversing right now as the market slides. But I don't know. I don't know of any banks that are buying up rental properties. In my experience, that's the last thing a bank wants to do is take back a property and most certainly buy a property. I'm not saying they aren't, but I'm not aware of it. But hey, that ought to tell you something. You know, they have faith in the real estate market going forward if they're buying properties. So maybe you should follow their lead, especially if you do it with non-recourse. If you buy it with non-recourse, the most you can lose is the asset you got for free that you already made a bunch of money on. Keep that in mind. Don't go to the bank and guarantee debt, because that's when you get yourself in trouble.
All right, and Perzina's final question, what is Quick Start Alumni Group?
People that have graduated from Quick Start School. Is that the answer? I mean, we're looking, yeah.
And we have a monthly call with that group. People who all kind of speak the same language, they've all had the same training, come with share their issues and can get help. It's kind of like our Gold Cup call, but it's only for Quick Start alumni.
Right.
Last question for this week is from Steve in Indiana. And he says, do I use my closing attorney to close private money loans as well?
Yeah, sure. They can do that.
And I'm assuming there's not an agreement such as the purchase and sales agreement for me to get lenders to sign.
No.
So I just explained to my lawyer, John Doe is loaning me X amount of money for X years at X interest to buy 123 Main Street.
That is correct. And here's the terms of that loan.
And they handle the things from there.
They fill out the note in the mortgage or deed of trust, make sure they send it to you before they send it to your lender. Because one thing you don't want them to put in there is a late penalty. Okay, if your lender hadn't said, I want a late penalty, you don't put one in the note and you don't have a late penalty. And tell your attorney, don't put a due on sale clause in. Not that it matters, because you're probably not going to sell a property with owner financing anyway. So, you know, but if there's no due on sale clause, then the lender can't call a loan due just because you're selling the property. And I think that's probably about it. But so make sure the terms are exactly what you told the attorney they would be. So you have to check your closing documents before it's finalized, and you'll find mistakes in there that need to be corrected.
Well, that's it.
Okay. See you guys next week. You better get going. You know, we got shortly. You better get going, because that's the last one I'm going to be doing for a couple months or more. And want to get in there live. And what a great time to go to Tampa if you live in the north. End of January. Good timing. Get the heck out of there. Get the heck out of the blizzard. Come down and see what real weather is like in Tampa, Florida. All right.
It'll probably be rainy and cold that weekend.
Yeah, probably will. Good weather. Come down to Tampa. All right. We'll see you next week. Go get something going.